in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by dawsontire and Will, your premier ag tire and wheel provider in North America, helping people grow. Tractorzoom, delivering insights, and Dryshod Boots, the official work boot of the Moving Iron Podcast. Chip is with Blue Reef Agri-Marketing out of Morton, Illinois. And Chip, we had a pretty exciting report come out yesterday that had a lot of shockers in it that people weren't necessarily anticipating. And one thing I would like to point out there, you did a kind of an in-house survey of your customers and came up with about 174 on the corn yield, and lo and behold, they were at 175 and 0.8 or something like that when they came out with that new estimated yield. So there's looks like there might be, based on what you've done in-house there could be that January report could be a bushel and a half off of what we see so far.
Yeah, absolutely. And, as a lot of guys were finishing up or still finishing up here, just this week in parts of the Eastern Corn Belt, that's a pretty common, occurrence is they say, yeah, my last few fields just kind of tailed off at the end. And, it looks maybe a touch worse than what I even thought. I've heard that since we did that survey. We've been doing that for a few years, several times a fall to try to get a feel for what people are seeing. And I think the double whammy is not only did we see the drop in yields on corn, from 178.4 down to 175.8, but we also saw a huge jump higher in demand, particularly the export side. And so our total carryout dropped 465 million bushels. Yeah. In just 1 month here, between the drop in yield and the increase in demand on corn, to 1.702 billion, 11.5% stocks to use. So it's mind-boggling. If you think back 3 months ago, the market was thinking we would have potentially a 4 billion bushel carryout.
Right.
And now we're sub 2 billion, one of the tighter stocks to use ratios in recent history here. And maybe there's more yield cuts coming on the January report, even if it's another bushel and a half to get down towards that 174 level. That's still a big crop in the big scheme of things. But this demand is really cranking. And it's just amazing. If you go back to the September stocks report, we lost roughly 250 million bushels there. And then 465 million swiped off the balance sheet yesterday. You're talking almost a 700 plus billion bushel cut in the carryout between the September stocks report, yields going down, demand going up. So it really makes this thing much more interesting going forward. Saw the same type thing happen in the beans, not as dramatic, but the yield was down. 1.2 bushels to 50.7. Everything on the demand side was really left unchanged on the beans. And so you could argue very strongly that they could raise the demand up a little bit on future reports. Nonetheless, we're at 190 million bushel carryout, 4.2% stocks to use ratio. I believe that's the second tightest stocks to use ratio ever domestically here. And, obviously we know what prices have been doing, screaming higher, up challenging $11.50 a bushel on the beans. And, I think overnight we were roughly just shy of 435 on March corn futures. And now what it does is it just raises the bar even more that South America produced a big crop. And that bar is high. They didn't do a lot of changes. They did drop the Argentina beans by 2.5 million to 51 million. The Brazil bean production was left unchanged at 133 million. That's a massive crop, and that bar is very, very high. So it leaves the door open for disappointment, especially in Brazil. And if those numbers start coming lower, down under 130 into the 120s eventually, you could be looking at a real explosive bean market and corn market for that matter. Not that we haven't seen that already. So this report yesterday was a game changer in a lot of ways. It just it really it increases the significance of the South American crop over the next 75 days here, and what kind of growing conditions they have. And they're already fighting dry weather, and it doesn't look like there's much relief in sight. In fact, some of the forecasted rains the last 24 hours here weren't very widespread in Brazil. There were some rains around. If you got them, they certainly helped, but there's wide swaths of Brazil and Argentina that are very, very dry right now.
Yeah. This is I'm not, we're going to pretend like I'm some kind of giant grain guru here, but, the Brazilian crop always plays a big role in what happens in the world supply and those kind of things. And this year, this is like the Pennsylvania of the market right now. It feels like everything's kind of hinging on what happens in Brazil and Argentina. And as you step back and take a look, you see the different agencies in Brazil and some private firms and stuff like that are coming out with, every week it kind of gets a little bit of a drawback as far as what they're doing, as far as how they, the bean yield might go up a little bit, but they pull back the corn yield a little bit, or the corn yield might go up the next week a little bit, and they pull back the soybean yield. So there's a lot of uncertainty right now down there, especially as they start coming into that key growing time, heading into harvest not too far down the road.
Yes, and interestingly enough, I think some of the corn, them backing off the corn a little bit, is due to maybe they're not going to plant quite as many acres, and maybe going to be later in the window, which will nip the yield a little bit. So the equivalent of the USDA in Brazil, typically the same day that we get our WASDE supply and demand reports, they put out some numbers, and their number, actually, they went up a touch yesterday for the Brazilian bean crop. They're at like 134 and change, I believe. And USDA stayed unchanged at 133. A little bit of a shocker, as dry as they have been, but it is very early there. They're still completing planting. They've kind of caught up to a normal pace for them. They started very, very slow, but really slammed a mass. I mean, it's mind-boggling how many acres of beans they planted in a 10-day window down there, and kind of caught back up to their average planting pace. But very, very dry, and that thing, La Nina, doesn't look like it's going away anytime soon. Right. And again, I'm no weather guru, but just from what I read, and obviously the whole world is following along here, the bullseye of the grain world is South America right now, and they are really struggling with dry weather. So we'll see. You hit the nail on the head. I mean, it's we're in a full-blown weather market, so you're going to see some massive volatility. They go through a period where they start getting some better rains in those main growing areas. And, as high as we are in beans now, and as big a range days, we were up to 35, almost 40 cents at one point yesterday, $11.50, you could have some massive swings here based on weather. And just one rain isn't going to fix it. They need regular rain down there through their whole growing season. So buckle up, because you could see some crazy stuff. 80-cent, dollar breaks in beans, and still not have seen the highs yet. So just go back in history. The last time we were up at these levels, obviously we were there in 2012 with the drought, but you saw some massive swings. Dollar swings wouldn't be out of the ordinary from these levels in the bean market. And throw in all the other stuff that we talked about the other day on the podcast here with the election and all the legal proceedings there, and COVID and shutdowns and financial market volatility, and what's China going to do. They're obviously a large part of this, because that demand is largely, growth in demand from China. So there's a lot of outside risks as well as weather risks, and but the bar's pretty high for Brazil to raise big crops, corn and beans both. And with our stocks shrinking pretty dramatically in the last 3 months here, this thing really could be explosive and volatile.
Yep. Okay, so I want your reaction to this. I've been reading a news story here this morning on Pro Farmer, and it was talking about, some private analysts are questioning the USDA soybeans export forecast. Basically, that the USDA is not truly reflecting the true export outlook, and as of right now, 2 months into this marketing year, we're about 81% of where the USDA has expected for exports to be, but they didn't really change the tally of exports when that report came out. So what are your thoughts on that? I mean, do you think that's just the USDA playing it safe type of thing, or do you feel like there's something to that?
Probably a combination of both. Historically, we've been in this situation a couple times. You look at a 4.2% stocks to use ratio here,
right?
And that's with a 50.7 bean crop. It's not like we had a disaster out there. That's a big crop. Mm-hmm. The demand's so big. Now, some of it is obviously front loaded. There's been such a massive amount of Chinese business from the October to, say, late January timeframe here. Typically, what you would see is once South America has supplies of beans, exports fall off the cliff, and South America and Brazil takes over, and I think they're playing it a little bit safe, wondering maybe if we don't normalize this thing and we've front loaded all these exports and then it dramatically slows into spring and summer. But B, they don't have a lot of room to go here. And, if they, with 190 million bushel carryout, if they go up 100 million in exports, this thing is super, super tight. And so you're never going to run out, right? The function of the market is get to a high enough level that it stifles demand, and we don't run out, but we could get very close. Theoretically, on paper, there's only 190 million left. I believe the tightest in history was after the fact. We found this out was 92 million bushels of carrot. You think about we plant 83 million acres of beans to end up with 100 million bushels. That's cutting her pretty razor thin. And so, I think that the USDA is playing it safe a little bit, but maybe rightfully so, to see how the exports are going to hold up into the second quarter of the year here. I should say the first and second quarter of the new year. But if they keep up, it's going to be interesting. Another interesting thing is they always put out an average price. They raised it up from $9.80 last month on beans to $10.40. That's an average cash price, farm price. So, 60-cent bump there. That compares to a year ago at $8.57.
Yeah.
So, they're catching this, but we don't have a lot of cushion on carryout, and price has to do the work now. So, what price is that? I don't know. A lot of it's going to depend on the size of the South American crop, but and you never know that till after the fact. But if the exports continue to be good, and the crush pace has been very strong as well, you keep cutting that 190 million bushel carryout, and you can start talking about $12 plus beans real quickly, and maybe $13 plus beans. But a lot of it's going to depend on the size of the southern hemisphere bean crop at this point.
Yeah. When was the last time you had $11 beans on the board? How long has it been?
Oh, I believe 2013.
2013.
Don't hold me to that. I don't have my charts right in front of me. I believe it's been 2013 was the last time.
7 years. Almost 8 years.
7 year itch. 7 year itch.
Well, everything goes in 7 year cycles, they say. So we're on top of that, I guess, coming out of that. One other thing I want to hit on real quick, Chip, get your feedback on this a little bit and give me your idea of what's happening in the beef market. Yesterday, the box beef really had a big run. Looking like it's almost up 50 cents on the selects, and then up. I'm sorry, not on the selects. On the selects are up almost 61 cents. That's a pretty big jump in one day. Taking a look at cattle prices and where that's at comparatively. What's driving that beef demand that was so slow here coming out of COVID?
Yeah, I think some of it's seasonal. Okay. I think some of it relates to some shrinking numbers. We're kind of probably at the tail end of some larger numbers of cattle that are market ready. That supply is shrinking a little bit. Demand has been very, very good. Our exports have picked up. Domestic demand, even through COVID, held together really, really well. It just shifted, right, from restaurants to more people eating at home. But that demand still stayed very, very strong. Box beef is on a tear. I think, again, I don't have the numbers right in front of me. Don't quote me on this 100%. I think in less than 2 weeks, we're probably $11, $12 higher on box beef. And so that bodes well for higher prices. The thing about yesterday is, though, as you see these screams higher in corn, that puts a little bit pressure on feeder cattle. The old saying, feeder cattle is just walking corn. Obviously, it's the major cost input of feeder cattle is corn. So higher corn prices pressure feeder cattle. That maybe held us back a little bit yesterday. But the anticipation is for some, lower numbers of market-ready cattle, higher cash prices. The box beef is helping, but we're getting a little bit of a headwind from these higher corn prices in here, in the way of the feeder cattle market, holding the live cattle market back a little bit. But I think things look good out into the end of the year and maybe the first quarter. Winter weather obviously is always a big influence with that. And so as we get into December, January, February, that's going to be closely watched too. That can, greatly affect performance and weight gain and, the amount of cattle that are ready can kind of create some holes. So weather's going to be pretty closely watched here pretty quickly when the snow starts flying. And things, I think, look pretty good from a entire, meat protein perspective, even the hog side. We've seen a little bit of pressure here recently, but again, that's because of some bigger numbers coming. That should tighten up once we get into the first of the year and springtime. And, right now, we just got the wind at our backs in commodities in general, but certainly the ag side. The dollar's come down off its highs, and we're just kind of in this inflationary type environment right now. Yeah. And shrinking stocks on the grains, great demand, La Nina causing maybe some hiccups in the southern hemisphere. And so things are cranking along pretty nicely, which is a 180-degree turn from what it looked like 4 months ago. It looked pretty bleak, and things can change. And that's just, we talk about this all the time, but, it just goes to show you got to have a plan, because the good times can change pretty quickly as well. And you can't just stick your head in the sand and just get super bowled up here thinking we're going to $14 beans and, $5.50 corn and everything's great. You got to have a plan and execute on it, because things change so rapidly in today's day and age. It's mind-boggling.
Yep, that's true. That is very true. So, yeah, it's a lot of stuff going on out there, Chip. So if folks wanted to reach you and get more information about what Blue Reef can do, what's the best way they can do that?
Well, the best way, you just give us a call, 309-550-7213. That's our main office number. We also have a website, www.bluereef, inc.com. And that tells a lot about our company and all the people and the team involved. So either way, we'd love to chat with you and see what we might be able to do to help increase your profitability and zero in and execute better on your risk management plan.
Right on. Well, today's Veterans Day, so make sure if you see a veteran, you thank them for their service, and I thank for all those guys out there working hard every day to make things happen. So with that,
absolutely.
I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. I will post my latest editions of the Moving Iron Podcast out there, as well as any blog posts that get posted. I also want you to check out movingironllc.com for the latest information about the Moving Iron Summit, and that's Nashville, Tennessee, January 20th through 22nd. Also check out the Global Ag Network and the great podcasters out there as well. So with that, I am Casey Seymour with Chip Nellinger. Let's go move some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here.